Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, February 19th. Okay, let's do a quick data check as I start the video here at about 7:20 in the morning. S&P futures up about 0.25%, NASDAQ futures 0.4%, and small cap futures about 0.85%. Oil is down this morning. I have about 2.25%. That may have changed since I wrote down the figure. Gold remains soft, but if you're looking for a gold position, I don't have the chart here this morning, but we are getting down to the point of very objective long-term purchasing level at support. So you may want to look at that on your own. I will try to take a detailed look at it today and circle back around and let you know specific levels. Copper is again up 2% this morning. It was up 2% yesterday. So 4% move in 2 days, and also attacking the probably psychologically significant $4 level. If it can clear $4, that would be a great line to shoot against if if you haven't been involved, or if you want to use it as a benchmark level for any positions that you take in Freeport, FCX, or Southern Copper, SCCO. Those would be good tradable names in the copper space. Also taking note of MP Materials, ticker $M as in Mary, P as in Paul, MP Materials. There continue to be rumblings out of China that they're going to restrict the rare earth metals export of those. So that is kind of roiling the marketplace for those names. And we're long MP, and I noticed this morning it was up about 2%. Pretty quiet day today. We've got flash PMIs and existing home sales. Not huge, I wouldn't imagine. And then don't forget, February OPEX is today. So please make sure you don't have any expiring options that you're not aware of, where you could be subject to a random assignment. That's always an unpleasant surprise. I've had it happen to me a couple times. And that'll knock you off center real fast if you get assigned a bunch of stuff that you didn't want or you had forgotten about. Also on OPEX Friday, don't forget your potential lotto plays if you catch a runner, in an Amazon or a Google or something that can really move if it wants to, where you could get a dirt cheap out of the money call, literally a lottery ticket that you could get something for $1 and it end up to be worth $20, that kind of thing. That's all up to your own personal risk tolerance, how you're doing. Usually what I do is if I'm having a really good week, then I give myself the liberty of, taking a shot. If I haven't had a good week, I usually don't, just because a lot of times they don't work. So I don't want to make a bad week worse by throwing money away on a lottery ticket at the end of the week, and then add to the damage. So anyways, I'll leave that up to you. As far as the charts this morning, I'm going to go over the indexes and FATMAAN names as we always do. Then I want to take a look at solar, the solar sector that's been beaten up, that has some interesting setups coming into play. And then I've got a couple random setups for you that I'll share. So let's jump into the charts here. Starting with the SPY 2-hour. Yesterday we came down and tested this 388 level twice before the dipsters really stepped in and drove price higher to back test the lower side of this channel. And really this is a dipster driven market. And what I mean by that is, everybody has been so conditioned to buy any little micro dip. It's been the standard operating procedure for so long that it'll continue to work until it doesn't, and then the dipsters will have to reassess. But the good news is we had the level identified. Support here, and support here. So 388 becomes a very important level on SPY as far as a level to hold before lower prices could be expected. Here on the 30-minute chart, we see it. We gapped down, spent some time here at a couple lower tags at 388. They recovered that to 389, which we also had marked on this 30-minute chart, and then made some progress into the gap later in the day. Was not able to fill it, so we still have an open gap above, yet to fill, and we'll have to see how this morning opens, but we may open with a gap higher, out of the gate, and then we'll see how we wrap up on Friday. And remember, this is something I always think about with on Fridays. It's really the most important trading day of the week. Why? Because heading into a weekend, you can gauge market sentiment from the standpoint of who wants to be long over the weekend. If there's a strong Friday close, that's a risk-on type of feel heading into the weekend. If there's a weak Friday close, everybody's kind of like saying, not really sure. I want to take a risk off the table heading into a weekend rather than face, a potential gap down Sunday night in futures. So watch those Friday afternoon closes very carefully, and that can give you a sense of risk on or risk off heading into the weekend. So, and OPEX only amplifies that. So keep that in mind today. Qs, these levels continue to work. I mean, this is one thing I tell people, especially new people that aren't familiar. I think I'm really good at the levels, identifying them. Of course, I can't execute the trades for you, but I can give you the levels where I think reactions will occur and levels that I think are really important on the various charts. And you can see here, we had this 330 identified, a breakout here. So resistance becomes support. We had the test. I don't know when this was, last week or early this week. We had the test, which held. They ramped it up. Then we came down, tested it again on Wednesday. And then Thursday, we tested it again here. And, if you were an active trader, when we dipped below and then recaptured 330 and it held, that was a good sign for you to be long on the recapture of a key level from below. That's always a bullish move and a move that you can buy with a stop just below. And you can see that they push price up above the median of the channel. And as we've discussed, that's often a support level within the channel. So we'll see if the bulls can build on that and push towards the top of the channel again, or if we roll over and come back down to test 330. And just looking ahead, if we were to lose 330, then your target becomes this 327 level at the bottom of the channel. 2-hour chart, same thing. What do I got going on here? Hold on, I got the wrong chart. Let me pull up the 30-minute. Sorry about that. Here we go. We came down yesterday with the big gap down. Came down to test this 329. Actually came down into the mid 328s. Lots of chances to buy here. We had there was a reclaim here and then a back test here. Those are both places you could have bought And then a next buying level was the recapture of the breakdown candle high, which was right here, just above 330.50. And then if you bought anywhere along the way, you had a nice ride up. And you can see, because this was a gap, this dashed purple line here used to be the gap. We gapped down, and that was the bottom of the gap. Once price recaptured that gap level, entered the gap, then it moved all the way up here. And this is the leftover portion that has not been filled yet. So there's quite a bit of room up top here to fill these gaps. And if you are actively trading this morning and you see price move above 333.25 into this gap, you've got, let's see, you've got at least $2 to the upside here to fill these gaps. So that's worth watching. IWM 2-hour chart doesn't look the same as the SPY and the QQQ chart. They were not able to rally price at the end of the day. So this looks more bearish than the other two, because buyers all they did was step in to stop the selling. They were not able to rally price. And here we see it in better detail. All morning, this 220 held, and they were able to bring it up to 221.75, which is a very feeble bounce, and then sold off into the close. So 220 is a good pivot level for you active traders in IWM, and we've got this downtrend channel intact. So any kind of break below 220 or definitely 219 is going to favor moves to 218 and then potentially 215 on IWM. Facebook, gap down into this 266 area and then recaptured 268.25 and pushed a little higher. That was probably tough trading. I didn't even mess with it. I think this 268.75 or 268.25 remains your pivot level. I think you can be long there looking for 272, but if we drop back down below, your target's 265. Apple has been having a rough time. We talked about the H cell yesterday, gapping lower. They brought it up towards the end of the day, but for all intents and purposes, we're not able to really significantly rally price. So as long as it stays below 130.50, I think you gotta remain pretty bearish on the Apple price action. I did see a lot of guys taking cheap shots on Apple on the institutional order flow side. Saw some March 140 calls go off. That's way up here. So they're buying $10 out of the money calls a month out, betting on a recovery here, which, it's possible, but that's a low probability trade in my view. If I'm going to take something a month out, I want to get something closer to the money, with a stop just below, rather than, buying calls with a delta of, 0.15 or something like that. Any kind of wobble or pullback, those calls would be toast. Tesla, sloppy trading, in this range between the top of the gap and this overhead resistance area. So between 780 and 800 is going to be choppy trading, and right here in the middle of the range, I don't think there's a trade to make. When it moves up to 800 or moves down to 780, then you've got a chance to make an objective long or short trade, depending on which way it breaks in the beginning. Microsoft, nothing to talk about, remains pinned below 244. I think that's your pivot. Yeah, if Fat Man ever wakes up, I like Microsoft above 244. It's been a frustrating trade. There's been some intraday moves above that, and then they give it up right away. So, but with this big base here, I think if it does break out and hold, then you got a good chance for 250 or higher. Amazon still trying to look different. Uh, it gapped down with the rest of the market, but then recovered 3,300. You got a nice push up to 3,340. So these $50 ranges, these levels continue to work well. So now with price in the middle of the range, I don't think you have a trade. I would be looking to get long on any back test of 330, and I would be getting long on any break above 3350. So continue to use those levels on Amazon. They've been working really, really well. Google, stay long against 2100. There was a bunch of spent hours and hours and hours just sitting on 2100 yesterday. I looked at it a couple times. 2099, 2098, popping back above, settling right back down on 2100. As long as it stays above 2100, I think you're fine for a long looking for 2200. So continue to use that as your key level. Netflix, nothing really to talk about here. 545 is a level, and 554 is a level. So this is $10 zone of chop. Wait till price moves either, up to 554 or down to 445 before you make any kind of decisions, because in here you have no edge. It can go either way. So wait for the objective levels to kick in. Now I want to jump into solar and renewables real quick, just to give you a flavor for what's going on. DW CRE is the Dow Jones Industry Group for renewables. You can see there's this nice channel, got to the top of channel, and now it has fallen away significantly. It was up at 425, and now it's down at 313 at the 50. So, this group needs to hold the line right here at the 50, or we could be looking at, a significant rug pull back down to the 200 potentially on the renewables sector. So lot of recent weakness here, and it's something to pay attention to. Here's the TAN solar ETF, and you can see here at this consolidation range and uptrend line. I backed off the uptrend line just so you could see it. Price is sitting right here at uptrend support and at the 50-day EMA. Now, if you're a bull, you can take a long right here, right now, against 105. The 50, which is at 107. 107. You can take a long right here against 107, and with a stop just below, and see if you can get a push back up to 122.50, something like that. But if it fails, notice this big price void here where there haven't been a lot of transactions. If you lose 105, there's a good chance it comes all the way back into this 80 area, and that would be a really nice trade to take. So like $20 a downside and potentially $15 a upside here from this level. So depending on how you want to play it, whether you want to play to the long side and say that's going to hold and play for the top of the box, or if you continue to wait thinking it's going to break down, set yourself some alarms, because if price here loses this 105 level, you could have a freight train heading south if this thing picks up speed. So you want to be in that trade. First Solar, I don't think there's a particular trade to make here, but it's a big name within the group, and it has now lost the 50, and I think it has an open path down to 80 here on price. So, but there's not a lot to shoot against here, unless you wanted to, shoot against the 50. Seems like pretty far away. So I just wanted to show this for illustration purposes. Here's a nice setup on Jinko Solar. Parabolic move and long consolidation. Now prices at the bottom of the box near 55. A breakdown would favor 40 as on a measured move basis, but look at the void. Look at the void. There is nothing below. And I think if it lost here, if it loses 55, I think 47.50 is the last chance to hold the 200. If it can't do that, I see it coming all the way back to 25. And just because there's nobody home in this big area here, and volume over price support does not come in until around 25. So another critical spot right here at the bottom of this consolidation box. You're certainly welcome to take a long here against 55 and look for a $20 move back up to 75. But if it breaks, you gotta switch your mindset right away and get short for a move down to the 200 for a test, and possibly all the way back down. REGI lost its uptrend channel. Looks like it's destined for a 50 EMA test here at 87.50. Watch that one. If it loses the 50 EMA, I think you're coming in right in here into 65, between 60 and 65 for a 200 test, and back to volume over price support on REGI. SunPower got dwarfed yesterday. It was down 17%. So, but we're right here at trendline support with the 50. That's an objective long. If you think the damage is done, get long for a move up. You've got a place here where you can put a really tight stop and take a paper cut if you're wrong, and then get bearish with some puts for a move down towards the 200 for a test. Not a lot of support in these areas with the fast run up. I think you would see a move to 30, then a move to like 22.5 if that uptrend line breaks. Plug Power, another example of a 50 test. I don't have this chart worked up to the same degree as the other one, but it's a popular name and a lot of people trade it, and it's sitting right here on the 50. So, I mean, the very first support is like 36. So, still a lot of room to the downside here. You could be short against the 50 and see how it went down in here towards 35. If you got that move, that would be a great little trade. All right, here's a couple other setups. Beyond Meat, we talked about last week, has not done anything, had a little push back into 160. If you're so inclined, that's an objective level. That's about all I can say. I don't know a lot about the fundamentals of what's going on in the name, but as long as 160 holds, that's an objective long here. And if that were to fail, you take a paper cut and move on. It's not a name I would short just because there's a lot of volume over price support in this area, and I would just let it go if the long didn't work. Hershey right on the doorstep of a breakout at 153.50. If you're interested in a staple name, if the market gets defensive, this might do really well. But regardless of any of that, a nice technical setup here with price coming right back up to the prior high and resistance. I think if you got a breakout above 153.50, you could see easily 160. Sanderson Farms, they're a chicken producer, and if you haven't noticed, chicken prices are going to the moon. Wingstop the other day reported earnings and got absolutely crushed. They were down like 16-17% on margins as chicken prices go through the roof. So the chicken names, that's a benefit to them. And here we've got Sanderson Farms on the weekly breaking out above this 147.50 area, and I see a clear path towards 175 as long as this support level holds. I didn't draw it in, but you can see the cup and handle. Here's the cup, and here's the handle. And we got a second here. Let me just do something. Let me go into annotation mode and kind of show you, when you have a cup and handle, the measured move is from the top of the cup to the bottom of the cup. So you can see that's 26%, and let's call it 27. And then from the breakout level, you can go up 27%, and that's your theoretical measured move off of the cup and handle setup on the weekly. So this projects out to 190. Now, I wouldn't be surprised if it got up to this 175 level and stalled at the prior high and then made a move. But it's nice to know what your technical target is. Notice the posture of the PPO is nice. It's moved into positive territory. Got an upsloping RSI, and I like this setup here. To be honest with you, it's Friday afternoon, so as long as it holds to close out the week, you've got a technical long setup on the weekly breakout, and then going forward, you're going to trade off the weekly because that's where you took the signal, right? So you're not going to worry about the intraday noise as long as the weekly closes are above this 157.50, or excuse me, 147.50, then your long is in good shape. Notice all the EMAs are bullishly stacked with a lot of compression. That can often lead to explosive moves. You kind of saw it over here where the EMAs were compressed, and then once it broke above, it gave you a good run. So other names you can look at is PPC, Pilgrim's Pride, and of course Tyson are big in the chicken sector. Okay, that's all I've got for you this morning. Let's do a quick recap. Dipster driven market. Friday afternoon on OPEX day. Anything can happen. There may be some added volatility just based on OPEX. We've got the key levels on the indexes to trade against if we're actively trading. Everything is still bullish because we haven't lost the key levels that we've identified. The dipsters have been programmed to buy every little micro dip, and until that changes, I think the outlook is bullish. FATMAAN names remain pretty soggy. We do have Amazon and Google trying to act differently than the rest of the group, but the other names remain soggy. And then bring the solar names into focus. And even if you don't want to participate or try on the short side, we are at some critical levels where you can take a tactical long against key levels where you can put a nice tight stop against it and see if the sector doesn't bounce in the weeks ahead. But I think solar does have tailwinds, but they've run a long ways really quickly. So any kind of pullback might be a good opportunity if we can pick our spots to get long, to get that second bite at the apple that we obviously missed on the way up. So keep that in mind. And then a couple of setups on Beyond Meat, Hershey, and Sanderson Farms. I like the Sanderson Farm one a lot, and Hershey just as much. So let's wrap it up there. I hope you liked the video. Thank you for spending time with me every day, going over the charts. I hope the levels are helping you. I think the most important thing I bring to the table each and every day are pinpoint levels that you can trust and trade against. And that allows you to use all your energy on execution of your trades. That's one thing I can't do for you. Actually make the trades for you. So trust the levels, work on your execution, and improve as a trader each and every week. If you like the content, hit the subscribe button, the alarm bell, even pass along a link to one of the people in your trading group. I'd appreciate that. Check out the show notes for links to the blog site and how to register for my content. If you do that, you'll get an invitation link to the trading room, and you'll also get a nice email every time I send out content. So this has been Chris Butts with Trader's Profit Compass. Have a strong wrap up to the week and have a good day of trading. Talk to you next